Welcome to Resolute RE's podcast, Resolute Reveal. And here we reveal commercial real estate insights through real conversations with the people shaping the market. I'm Kang with my co-host Martin Turner. And today we're joined by Danny Khalil with CoStar. Danny is an associate director of market analytics at CoStar. He's known for turning big market data into clear, practical insight for brokers, owners, and investors, and bringing a real clear lens to what's happening on the ground, especially in Texas commercial real estate. Danny, we're very happy to have you. Thanks for being here. If you don't know, if I wasn't a broker, I think I would love to be having your job, as I'm really, I love to follow research and the data. And, commercial real estate is an interesting industry. A lot of people, we come from all walks of life in different places. It's not the first dream job that people have, I think, in many cases. And, we kind of find ourselves in this business from many different ways. And so we'd love to hear more about you and your background and how you got to where you are today.
Yeah, I agree. It's not exactly the first industry that comes to mind when you're a kid, right? 5 or 6 years old. Very rarely will a kid say that he or she wants to be in commercial real estate, right? Well, that would have been the case with me as well. But I was interested in, I think, many adjacent things for sure. I think, like we spoke about, some of my interests as a kid, loved playing SimCity, loved, infrastructure, and just talking to my parents about, like, why is everything always under construction? Seems like everything's always being built. When are we going to finish it? And so it's kind of funny because you could trace that all the way for the next couple of decades into my college career. Chose to major in political science, but was really more interested in public policy and that local policy route. From there, I went and occupied a few research positions, urban planning positions, worked in economic development for a while, but my interest was always in cities and the built environment. So urban economics was a very natural fit for me. And then working here at CoStar as the in-market analyst for the San Antonio market specifically, but also this broader region has been a great fit, I think. That's essentially what I do. I write about the market. And in many ways, I'm lucky to have a job where I get to think about the market and then do these presentations as well. It suits me, I think, in my skill set pretty well. But yeah, that's the short story, if you will, how I got into this industry and why I'm so passionate about it.
So, Danny, just curious, from your job description, how do you choose what to work on? Like, how is that determined? Like, do you just take a hot topic and run with it, or how is that decided?
Well, I mean, so we have our major market reports that we always have to keep updated, right? So the San Antonio multifamily report, the San Antonio office report, that's all written by me, not an LLM or anything like that. So that's kind of how things are structured, right? But in order to know what to write about or what's most important, I often rely on what are called in-market interviews. That's where we meet people in the industry, brokers and other people who are actually kind of making things move, I guess you could say, in CRE locally. And then from those conversations, we're able to, I guess, make sense of the data or frame things a lot better. And then that helps us write the narrative that people will see whenever they look at a CoStar market report.
So what does your weekly workflow look like, when you're following all the data and putting together these reports, or just, staying on top of things?
Yeah, so daily workflow, it's definitely structured around those market reports, making sure everything is timely and still reflective of what I'm hearing in the market. We were just recently at an industry event, right? And just making sure that what I'm hearing from people who are on the ground is not necessarily too different from what I'm writing about is important. So that's a lot of what my week is making sure that what we're saying in the CoStar product is reflective of what's actually happening. And then from there, I'll do more outward or external facing things like writing news articles, drafting a few of those. I like to have a weekly cadence with that. It's kind of our goal, and we like to keep things fresh, right? Writing about trends on a more weekly basis than something longer. And then from there, it can be a little bit more unstructured. It depends on the week, right? If I have a big presentation coming up, got to devote some time to the slides, right? Very important. And then, answering client questions, emails. That's always a big part of the job as well. So that can really vary depending on the day.
CoStar data is something we highly depend on as industry professionals. And I'd like to, could you dig into a little bit how that data is collected and then also like how you verify? Obviously, you want to make sure things are correct. That trust hierarchy, your way of filtering the truth behind it all, and then your comfort level of releasing that data so that people like us could, really rely on.
Yeah, absolutely. I'd like to talk a little bit about that because I think there sometimes is a bit of confusion around what exactly my role is and maybe what a researcher role is. And that's understandable because in many organizations, the analyst and the researcher are one and the same. At CoStar, because we are a research and data company, it's a bit of a bigger operation, right? So the analyst functions are separate from research, which is largely done in our headquarters for research in Richmond, Virginia. So those are the people who are really the backbone of the company, who are making sure that our data is up to date, is reflective of the market, and is providing value to the client, to the customer at the end of the day. What I do is a lot more qualitative in some ways. It's a lot more client focused and external focused, and it's a lot more about making sense of the data. So there can be some partnership between research and analysts like myself. Usually there's about one per major market. So I'm the one for San Antonio. We have one in Austin. Some bigger markets have a couple, like Dallas Fort Worth has two. But generally speaking, there's usually about one point person per market. And there can be, moments when we're working together, especially on client questions or concerns, or just to update data sets that we feel like the in-market analyst feels need to be updated or to be looked over. So sometimes we can help research there in pointing them in the right direction or helping them update things that we know, for example, are correct or incorrect. So we can provide on the ground intel in that way too. Does that help kind of clarify a little bit, maybe more like what our functions are as the in-market analyst and economist and
Yeah,
the
definitely.
research headquarters?
Interesting. Yeah. Cause I mean, we get calls a lot, I guess, from headquarters, just to verify, like, if we did a recent trade, about some leasing activity that we did. And so that data, as you mentioned, gets collected overall. And then you're the boots on the ground, really just verifying everything and getting a better pulse on the market, I guess, from a, boots on the ground point of view with interacting with people like us and owners and other investors, if that sounds right.
Absolutely. That's a big part of what we do in CoStar Market Analytics, which is the division I work for. Yeah, that's I would say a critical function for us is getting that on the ground feedback and making sense of what our researchers are collecting in many instances.
And Danny, you are working on the commercial real estate market writ large, right? You're doing multifamily, you're doing office, retail, industrial, all of the above, right?
Yeah, so it's a big market, right? CRE. I do cover a few property types, and we're also expanding a bit into residential right now with the homes.com push. So I'm also the point person for San Antonio residential, but the main four property types that we cover, right, are the big four. It's retail, office, industrial, and multifamily. And so that's kind of the core of the job, right? Is just making sure that those market reports are covered, that we're providing excellent client coverage there, and that we are presenting on those topics to the industry to a satisfactory level. So those four would definitely be the core, with residential as well being kind of a new initiative for us with the homes.com push.
I'm just curious, from those four animals, is there one that is more challenging to read than the others? Like, do you find it easier to interpret the data that you get in the office world versus the retail world? And the reason I ask that is just because, I know we mostly do retail, and there's so many differences between a strip center. They can be in the same market and be completely different products. So
Yeah, so I would say retail is the most diverse property type. Absolutely. I mean, that can be the most difficult one to make heads or tails of sometimes, just because you're writing about things from this market wide perspective, and you do have to make some generalizations to kind of make sense and tell a coherent story to people. I can't necessarily break down every single retail or shopping center type in all of my presentations, right? But yeah, I would say retail is definitely one of those property types that can be one of the more tricky ones to make sense of, because I mean, you could see very different trends now with what's happening with uh, let's say strip centers or neighborhood centers, and what's happening with power centers or standalone retail, they can be widely divergent, and the pricing can be very different. The rent can be very different. And then the construction pipeline also can be quite different. So, yeah, I would say retail is one of those property types that definitely requires a bit more thought, bit more coordination with our national director. He's a very talented guy, and he provides us with property level feedback from a national perspective just on retail. So we have one for each property type: office, industrial, and multifamily as well, and now residential. But I really work with our retail national director to make sense of things sometimes. But yeah, as far as other property types are concerned, I would say there is a bit more standardization in some ways with a multifamily asset. The data is often more consistent sometimes, or it's often painting the same picture across many apartment complexes. When you get to, I'll call the other three property types CRE. When you get to the more traditional CRE, right, like office, industrial, and retail, things can be a bit more opaque. There's fewer transactions in some ways. It's not like apartments where everybody's always leasing apartments constantly, and the data feeds for those can be quite robust and frequent. But when you have those other three property types, sometimes you do have to really consider comps, really read into things, and then rely on your interviews with in-market participants to make sense of things and to craft that narrative, if that makes sense. So yeah, retail is definitely one of those property types that I'm always trying to make heads or tails of.
Thank you for that. Yeah, we need it. If you could maybe, obviously, you're being on the show and, your role, like I think a lot of our listeners would love to hear, your thoughts on 2026. I mean, if you could touch on some of these CRE products like at a national level, or what you heard or what you're seeing from CoStar. And then also we could drill down to your expertise in the market that you're working.
Yeah, absolutely. I think especially when you consider a property type like retail, population growth is probably one of the most important factors, if not the most important factor for commercial real estate. So I think San Antonio has a bit of a different trajectory in some ways than the rest of the nation.
Mhm.
We are still a fast growing market, especially for being such a large city. We're continuing to post, it seems, healthy job growth and healthy population growth relative to the nation as a whole, right? Things have definitely slowed down over the past, let's say, 3 years for sure. I mean, we've seen that. You can trace that all the way back to the rising interest rate environment that began, mid 2022. It's very clear that things have gotten a bit more slow since then, especially in commercial real estate. Absolutely. However, I do feel like being in one of the fastest growing markets in the country, our trends can be a bit different at times. From a national perspective, I think people have read the headlines, and there's a lot to consider there. There is, unemployment that's been rising a bit slowly, but it's definitely ticking up. It ticked down last month, but the general trajectory has been kind of upwards, right? About 4.4%. San Antonio tends to be a little bit lower than that. But I think for 2026, there's still that uncertainty in the air that was characterizing a lot of last year. It's people are talking about when rate cuts might happen, which is probably one of the most important things for commercial real estate. And it seems like every week there's a different consensus, right? Now it seems like, given that we saw inflation a little bit hotter than expected, maybe the Fed won't be cutting rates at the next meeting. Who knows what's going to happen the rest of the year? There could be a couple more rate cuts. I think that's very doable, or very, I guess you could say, plausible, because, we'll be getting a little bit closer to what the Federal Reserve considers its neutral rate, which is when monetary policy is not too restrictive, but not too lenient either. And so I think getting closer to that, it seems, is the committee's ultimate goal. However, I think there's a lot to watch out for this year. We'll see how things shake out. A lot of it's outside of my wheelhouse, like international trade policy and things like that. But I can tell you from a local perspective and a regional perspective, San Antonio continues to be one of the markets that's outperforming at the moment. A lot of the Sun Belt is not just San Antonio, but San Antonio is kind of that steady Eddie market, as it's known. So, some other Sunbelt markets like Austin that had a big run up, 3 years ago or 4 years ago, they can be a bit more volatile. But a market like South Central Texas tends to be a little more steady and something of an outperformer. So we'll see. We'll see what 2026 holds. But yeah, for now, I think outperformance would be what I would say for this region is likely to be the case.
Excellent. Yeah. So let me see. Covering retail again, like, gotta ask, this is our specialty. When it comes to data, What should brokers, landlords be following right now? And let's talk about specifically for San Antonio, because that's your expertise, or South Texas, or other areas that you're working in.
Yeah, that's a good question. I think rent growth was something I had my eye on for a while because retail was kind of one of the standout property types for rent growth for a while.
Mm-hmm.
And to some extent, it still is. We've seen that moderate in recent quarters, right? But that's something I've definitely had my eye on there. Less so construction, because the construction picture tends to be much of the same. There's not much of it. And when there is construction, it's in the high growth suburbs, right? It's along 1604 north of that for the most part, except for like big projects like, the market, UTSA Boulevard, and all that is kind of
Mm-hmm.
pretty close by, right? So construction maybe is much of the same, but I'm also keeping my eye on population growth and job growth because that I think directly influences retail real estate. I mean, that's the demographic and economic core, I think, for the property type. That's the health of the consumer, whether the
Mm-hmm.
consumer base is expanding at all. And that is, I think, why retail exists in the first place, to offer those brick and mortar services to the people who are moving here or, people who are new here or the expanding suburbs of the area. So I
Mm-hmm.
think, that's something I got my eye on as well
Yeah.
is population job growth, so the demographic front, and also rent growth and seeing kind of how the health of the fundamental situation is for that property type.
Right on. Yeah. Again, like majority of the newer product we're seeing out on the north, northwest, far west sides. When it comes to, we work with a lot of private client investors and landlords here, and there's a lot of there is a big divide for when it comes to newer product, the ones in the faster high growth areas, and then why don't we say like the more established neighborhoods inside 1604. Still a lot of retail product there, a lot of older vintage, long term holders. Any things for them to consider when it comes to San Antonio rent growth, vacancy, things that they should be, keeping an eye on, things they need to consider, moving forward.
Yeah, I think so. With the established areas, I mean, it's a bit different, right? Because it's more than just population growth. It's a bit more of location, right? Which is, you could argue, the most important thing in real estate. Some retail that's well located within 1604 and especially within Loop 410 is hard to replace, right? It's at a
Hmm.
critical intersection or a part of the city that's so central to where people live or work most likely. And so I think a lot of that comes down to, less so a population growth demographic story, which I was just talking about with the expanding suburbs north of 1604, and more about, whether a piece of property or a location is invaluable. So that's based on, what I'm hearing from a lot of interviews and of course the trends I'm seeing in the data. I think, for the most part, retail property type is linked very strongly with household health, if you will, financial health, the consumer, how things are going there. So if you've got a neighborhood where, it's got a healthy consumer profile or a larger catchment area for those retail properties, then I would imagine that rent growth in those submarkets could outperform. So it's mostly about keeping an eye, I think, on the catchment area. That's how I think about submarkets, at least within 1604, if that makes sense, within 410.
Sure. Yeah.
It's not like some of these established areas are going to be growing at breakneck pace, but I keep an eye on what home values are doing. For example, in some of these submarkets, let's say the submarket I'm in right now, like the near northwest side, what's happening with home values there? Are they declining? I mean, because that all I think indirectly affects the retail in that area as well. So that's another thing I keep my eye on too when I'm writing about the market and thinking about things.
Hmm. Another product that kind of really sticks out to me in San Antonio is office. Historically, I think we've had a bit of an oversupply. It's been challenged even further since COVID. Do you have a take on office property when it comes to San Antonio?
Yeah, I think Office has this almost similar dynamic to what we were talking about just now with that inside 1604, inside 410
Mm,
retail real estate market, because Office is, especially for these established areas, not really going anywhere. We don't have a lot of construction at the moment, to put it mildly. We don't really have any
yeah.
large scale speculative office construction in this market in much of any. So, I mean, a lot of these buildings, and I sit in one right now at a pretty invaluable location at I-10, 410, right? They're benefiting from the location that they're at. And they're benefiting from the fact that there's not a lot of competition coming online anytime soon. Now, vacancies have increased, quite a bit in San Antonio and many markets over the past 5 years or 4 years, and in this segment of commercial real estate. That being said, many of these buildings that are 80s vintage have managed to stay better occupied in this market than nationally. And that's been
Hmm.
interesting to me because part of it's because of how quickly the construction pipeline just slowed down in San Antonio post COVID for office space.
Okay.
So there was that constrained supply there. And then
Hmm.
demand kept being fairly healthy for an office market because of population growth and job growth and all this momentum that I keep harping on about ad nauseum at this point. But, I mean, it really is important for all segments of commercial real estate. And so long as you have people moving here and employers expanding here, maybe we don't have, headquarters moving here all the time, but we've got a lot of branch offices that are always opening in a big growing market like this, then I think you've got that demographic momentum that's important for office and retail.
Hmm.
So, we've seen some of that East vintage property here in the office market locally be somewhat better occupied than it has been nationally. And that's been very interesting to me because much of
Right.
the story around office has been the flight to quality and how people are just leaving for five-star space. And trust me, if we had more of that in San Antonio, more of that five-star segment, the Broadway corridor, that kind of really nice class A plus stuff, I'm sure we would see a different dynamic. We don't. And so most people, given the options of the city, are often looking at the class B plus, I would say, segment of the office market. So that's managed to be better occupied than it has been nationally. And even the rise in our vacancy rate has been slower than it has been
Right.
for the rest of the nation. Now, CoStar as a whole is reporting about 11% vacancy for San Antonio's office market, a bit lower than what you might read from a brokerage report. We include all office properties in that average. That includes owner occupied and single tenant and things like that. But the rise for our office vacancy rate has been a lot more, I guess you could say, restrained than the rest of the country, and I think that has a lot to do with what I'm talking about there with the Class B.
Yeah, for sure. I think a lot of
A
strategy for
lot
owners
there.
too was to, yeah, the amenity factor, like adding more amenities to their office buildings, putting certain improvements that kind of, update the older vintage to what people are looking for today. Do you think some of that has been working, or have you seen some owners like putting that into effect with some good results? And I also wanted to kind of touch on like co-working too. Like, I mean, WeWork was a big thing at one point. I still, I office out of a co-working space with a pretty good operator here in San Antonio. What do you think about those two?
Yeah, so I think co-working is very interesting, right? I've got an article coming out about co-working space in San Antonio that mentions very interesting projects like Project Co-work, but I'll put a pin in that for now. And I just wanted to touch on, what I was saying about office real estate and kind of tie it off with a bow because yeah, I do think amenities are important. Clearly, there has been something of an amenity war with other property types like multifamily, but I think ultimately it comes down to people wanting to move to nicer and better space when there's the option to do so, especially in a tenant market. Now, office and multifamily I would call tenant markets for sure, but in a market like San Antonio. When they have leverage, tenants will move to more amenitized space and nicer space. It's a bit different, the reason why it's a tenants market for multifamily and the reason why it's a tenants market for office. One's heavily supply related. That's multifamily and apartments. We just build a lot of those. So that creates a bit of an imbalance there. And one of them's more demand related. There's just been a bit of a drop off in demand for office real estate over the past 5 years. We've seen that rebound a bit and it's been more resilient in San Antonio than many other markets.
Hmm.
But we have seen instances of owners being a bit more competitive with what they're offering in terms of amenities and how nice the space is, especially common areas. And many of these, like I was saying, B plus properties seem to be relatively well occupied compared to their national counterparts. Again, we're seeing more of an issue there nationally with some of that three-star product is what we call it in the CoStar database, and less so in the 4 and 5 star segment because that seems to be what's happening is people who were in three-star largely have been upgrading to 4 and 5 star. We don't have a ton of 5 star in San Antonio, so the upgrade choice has largely been from 3 star to 4 star to like older 4 star to newer 4 star. So that's kind of what I think we're seeing for office writ large. As far as co-working is concerned, I think what's interesting there is that there was this big push to convert a lot of space post 2020, and you can see it in the data. and this article I'm about to publish, and then the number of co-working openings has been slowing a bit. We still have a lot more co-working space than we've ever had in this city and most markets, but the big push for opening space was 2020, right? I mean, it was just dealing with the pandemic and everything. It was something of an emergency, right, for owners and operators of office space, and that push led to a wave of conversions in the early 2020s, from traditional office setups to oftentimes it was just the owners themselves converting it into what they called co-working space. Now, the definition for co-working can be kind of malleable at times, right? Some of it is you dig in and you're like, well, they look more like executive suites or virtual offices to me, but the branding of co-working has absolutely had a moment here in San Antonio, and the early 20s was this big inflection point, and some key players like Project Cowork, I think, continue to open space, into the middle portion of the decade. So that's been very interesting to watch. But yeah, in the early part of the decade, it was a lot of those immediate conversions, right? You
Yeah.
you saw like just people who owned these Class B assets who were struggling. They just converted, entire floors of the building to
Yeah.
what they called co-working, and they advertised it online. And you've seen, I think, a big uptick in that segment.
Yeah. Speaking of conversions, like there's a lot of hype about office buildings being converted into multifamily. I mean, the reality of that is pretty tough, right? I mean, what are you seeing? And, there's a couple downtown in San Antonio, right, that are happening. What are your thoughts on that? And maybe we could touch into multifamily, a segue into multifamily after that too,
Yeah.
because I'd love to talk about that.
Man, what a can of worms. And I'm sure you have plenty of thoughts on this too. Office to multifamily. Well, it can be done,
Right.
right? And it has been done even before the pandemic. When I was just starting off in my career, I did live in a downtown office building that had been converted to multifamily, like, you know, 30 years ago or something like that. So it's been done
Hmm.
historically. It's just the big push hasn't really happened since, or it happened, relatively recently with 2020. And I think it really comes down to the floor plates, the design, the architecture, and the lighting situation. Because a lot of office buildings have a lot more interior rooms, interior space. They're not always every room situated around windows. So it's tough to build apartments and space for people to live in long term around
Hmm.
those constraints. So I think that's been the message I've been hearing from a lot of people who are active in the space, from a lot of developers, from people who have experience with these projects, that's the major issue. Now, if you have something like, let's say, the Tower Life building in San Antonio, it's an older building, right? So the floor plates are smaller. It's not a big brutalist building from the 80s that has these gigantic floor plates and a lot of interior space. You've got a lot of rooms that can be divided into, I think, rooms that are facing outward, some natural
Hmm.
light in there. That can all make for a good conversion. However, conversions are extremely expensive, and asking people to pour that kind of money into their properties in this environment is challenging, especially with capital being so, tough to come by in many instances as right now. So I think those projects are still limited in number, right? And I think the ones you're going to see get off the ground are the ones that have some sort of special situation, right? So I think with Tower Life Building, you have, I think, the city of San Antonio or Bexar County actually, behind a part of that project. It's
Hmm.
owned by a private group here locally, but they also have county money, I think, behind it, and they have, I think, an incentive to create more affordable units, and so there's a very specific deal there, with a very strong component of public policy that's getting that past the
Right.
finish line.
Yeah.
Many other buildings where people are just saying, "Oh, it'll convert to multifamily," easier said than done, right? Much easier said
Sure.
than done. And I hate to say it, but what I'm hearing from a lot of people in the market right now is that demolition is often the preferred path, because just trying to retrofit a building for something it was never designed for, not even remotely
Hmm.
designed for, is quite the challenge. So that's what I'm hearing, and it sounds very plausible, especially, like I said, how given how scarce capital is right now. But yeah, I mean, those are some of my thoughts on conversions.
Yeah. Definitely there's
Challenging.
more than just an investor or developer going in to transform an office building into, a residential apartment complex. I mean, There so many things are involved. If it wasn't for the political, the public and private sector moving together to make that work, just probably impossible. Touching on multifamily, where I think Austin is in an oversupply situation, rents out over there have been pressing for, which is good for renters, but not so much for the developers and owners of those products. Where do you think multifamily is going to be heading, especially here in Central Texas?
Yeah, so multifamily intimately linked with population and job growth, right?
Mhm.
Probably the most, I would say, intimately linked outside of maybe retail. Those two property types very much dependent on whether people are moving and expanding in the area. It doesn't have to be just people moving, but household formation is an important indicator to look at there. So for the long-term perspective, I think for Central Texas, you're probably looking at an area with above average demand. So I think in many ways, this region is positioned well for multifamily demand over the next decade or so. Now, those are longer trends, right? People have certain realities they have to face, on a day-to-day basis and a year-to-year basis, and many managers and owners are currently dealing with those right now. As you can see, rents are falling quite a bit in that segment in Austin, and then San Antonio is just kind of right behind Austin right now in terms of falling rent growth for the multifamily segment. That has to do with overbuilding, right? So in the short term, there's just been a lot of overbuilding, and that can be traced back to the lower interest rate environment of the early 2020s and the booming kind of post-COVID economy we were in at the time. A lot of people were getting good jobs. That meant higher wage growth. That meant rent growth for multifamily that hit 9% at one point, 10% at one point. But then, the next few years, we saw the rising interest rate environment, things normalized. And ever since then, we've had neutral to pretty much negative rent growth for most segments of the multifamily market, not just in San Antonio, but also Austin. And I think longer term, right? There's this belief, and it's supported, I think, largely by the data that there's population growth here that, it's maybe it won't be as fast as people are talking about. Maybe it won't be as fast as it was in the 2010s or 2000s, but most people believe assuredly that it's going to be better than the national average. And I think there's a lot of reasons to believe that, but most people's realities and whether they can stay solvent has to do with the day-to-day, year-to-year situation, what's happening in the shorter term, medium term. So for San Antonio and Austin, I think right now it's just about churning through that wave of supply. I think that's the goal right now for market fundamentals.
And with the shortage of overall housing itself, and then
That too.
also, making housing affordability and attainability will probably encourage or help the multifamily segment as well.
Yeah, and we are dealing with a housing shortage, so it's very interesting, right, to see, rents falling year over year despite all that.
Yeah.
Yeah, so it's something that'll absolutely help with, I think, what's going on with housing right now.
Mm,
We have a housing affordability issue nationally, not just regionally. So from a tenant's perspective, absolutely. But in the short term, there's still that supply shock.
mm.
So I think that's kind of the major thing right now for South Central Texas. And going back to the topic of office to multifamily conversions, that's another headwind for that conversion that I didn't even mention earlier is, you'd be converting from one property type that's, a bit challenged in terms of rent growth right now to another one that's also pretty challenged in terms of rent growth, at least in the short term.
Right.
Multifamily rents are, not inspiring right now, at least over the past year, and possibly for another year. We'll see what happens beyond that. But so that's another headwind for conversions at the moment for office to multifamily. I think multifamily is doing a lot to help with the affordability crisis because it is offering something of an alternative right now for tenants that may be priced out of the more expensive housing market, for sale
Mhm.
market.
Mhm.
We've seen housing prices rise quite a bit in San Antonio. Over the past 2 decades, San Antonio has been the number 2 market among major markets for house price appreciation. It's really tied with Dallas-Fort Worth, and then number 1 is, of course, Austin. So, when you look at it from that perspective there, there has been quite a lot of price appreciation over the past couple decades that's locked many people out of the housing market, not to mention the current interest rate environment, 6+% mortgages. So you combine all that, multifamily is providing an avenue for housing affordability at the moment. And longer term, we'll see what happens with demand and population growth and all the demographic stuff I was saying. But many people I talk to are pretty optimistic about that longer term. It's about dealing with the short term
Yeah.
challenges.
Getting through it now. Being in South Texas, we got to talk about industrial, and hopefully you could give us some clarity on that. Industrial had been one of the hottest product types as of recent. Are they going through a little bit of struggle right now? I mean, what are you seeing when it comes to industrial?
Industrial is interesting because we've seen across the board, across all the four major property types, less construction, generally speaking, in every single market, every single segment. We've seen less, multifamily construction last year compared to the year before, less, everything, less industrial construction, less retail construction. However, when you look at Laredo, Texas, and their industrial market, we actually saw an uptick in industrial construction activity, which is very interesting given the environment for capital, for debt for equity right now. I think that the health of the South Texas industrial market is going to continue to be the trade relationship with northern Mexico. So, the I-35 corridor really that connects, San Antonio and central Texas, Austin, all the way to Monterrey, Mexico. So, I mean, that whole corridor, so long as trade is flowing, especially in the automobile sector, which is very important for the Port of Laredo, I think you're going to continue to see some momentum for industrial retail long term. Now, short term, we'll see how things go, whether we get some more clarity on tariff policy for things. It does seem like there are some substantial exemptions, especially when it comes to the USMCA. So that helps the Laredo industrial market and South Texas industrial market largely. But yeah, I think we're going to continue to be a logistics oriented industrial market into the future. Manufacturing, we'd all love to see some expansion in manufacturing in South Texas. However, I think the critical link here is always the logistics market, warehousing and distribution, which is kind of the critical role we play nationally, right? A lot of goods come in and then they go to San Antonio, and with I-10, they're able to reach the East and West Coast quite easily. So I think we will continue to be a distribution heavy market, but we'll see what happens with trade policy and things like that, because I think that's super important to South
Yeah.
Texas and Laredo in particular.
What about the other border cities like McAllen and the Port of Brownsville? And what is the activity like in those markets?
Some interesting developments for sure near the Port of Brownsville and what they're planning to do there. McAllen as well, some very interesting, I think, trends there for the industrial market in the Rio Grande Valley. That's going to continue, I think, to be an important link in the international supply chain, especially for the import of produce. I think that the Port of Brownsville is going to continue to be an important one as well. The Rio Grande Valley is a little bit less intimately linked, or I guess you could say less dependent on trade with Mexico compared to Laredo. I think Laredo really just lives and breathes whether there's trade on the I-35 corridor. The Rio Grande Valley operates a bit like its own node in some ways. Trade with Matamoros and Reynosa is still very important, but I think the local industrial markets there will benefit from some of the same tailwinds that San Antonio has, which is more natural domestic migration, natural increases to the population. When you have those sorts of tailwinds, you have tailwinds for the local industrial market as well. So San Antonio's industrial market, for example, is a lot more domestically oriented than Laredo's, right? We have people moving here, which creates demand from home suppliers, contractors for smaller industrial space. And I think you're going to continue to see that in portions of the Rio Grande Valley that are fast growing as well right now too, such as the McAllen area, Hidalgo County. Trade with northern Mexico will continue to be vital for that area. But yeah, so those are some of my general thoughts on the industrial market there.
The cities of McAllen and Brownsville are really hoping for that industrial growth that they're seeing in Laredo, but to see that play out will be time telling, I'm guessing.
It's a double-edged sword, right? Laredo has had quite the boom, but it's also in many ways dependent on that boom. So you gotta consider it from both perspectives, I guess.
Yeah. It is amazing to think that is like the number one port in the United States, right?
Yeah.
I'm not sure if it is today, but it was. I think we, gained that record late mid last year or the year before that. But a lot of good things happening there. If there's one other product type you could shed some light on, it would be data centers. This is like the new product that's, making all the headlines. Do you have some insight on that? I know that we have, a lot of it happening in Texas, a lot of it happening in San Antonio. Is it overhyped? What could like the average investor think about it? Is it attainable?
Yeah, I think data centers are going to be a very important piece of the national economy. They already are well into the future. It's surprising because Texas maybe hasn't seen as much data center construction compared to some other, I guess you could say, nodes around the country, such as Virginia, where that's just been very, very heavy, especially with the AI build out. However, data center construction has still been an important part of the story here, especially for far west San Antonio, right, where we
Yeah.
have seen some of those big projects kick off. Microsoft's got some projects out there. So I think looking forward, they're going to continue to be a very important part of the industrial market locally and, of course, nationally. They were a big thing before the AI boom, if you will. And they'll probably continue to be a big thing into the future as well. There is a need for data centers beyond what's going on with AI. I think there's a lot to consider, of course, with that market and the health of it. I think we're still learning a lot right now about the profitability of all this downstream. So there's been
Yeah.
a lot of talk there, and I think you've seen some volatility in equity markets that reflects that. It's clear the demand for this product is out there, but the business model maybe is still being worked out. And I think it's a very rapidly evolving segment of the industrial market. So yeah, those would be my thoughts, I would say, high
Right.
level
Yeah.
on AI data center build out right now.
Yeah. It's definitely an interesting one to keep our eyes on. I get calls from investors, wanting more information about it. I don't have enough. I mean, I don't really know where things are going with it, but it's definitely getting on a lot of people's radar, and people want to get involved. I mean, I think
Mhm.
that's really where the people feel like a big portion of the future is going when it comes to real estate.
Yeah, longer term, absolutely. Yeah, that's what it seems.
Before we go, do you want to cover anything that you think that we're missing, Danny? Or
I think I probably talked to your ear off at this point. So I think
no, it's great. It's amazing.
there's
It's a
there's
lot of good content here.
a lot to talk about, and we could talk for another hour or
I
so.
love it.
So I
Yeah.
think
I wish I had your time like this all the time, man. This is great.
no, I appreciate it. God, because I was like, we could talk about residential too, and I'm like, oh, that is a whole another thing.
I mean, I'd love to cover that actually because
Yeah,
it's such a huge thing. I mean, obviously, it affects everybody. It's bigger than all of these other products that we're talking about. I mean, if you can share some things about what you're seeing, I know that CoStar is more involved when it comes to residential too, right? With their acquisition of Homes.com, and I mean,
yep,
you
yeah.
guys have a lot going on at
There's a
CoStar.
there is a lot going on, absolutely. And Homes.com is a huge push for us right now.
Yeah.
So I mean, what we're seeing as far as
Let's talk
go
about the
on.
CoStar umbrella real quick. Okay.
Sure, yeah, sure.
LoopNet, Homes.com. I think Land.com is another product. What else? I mean, there's more, right?
Apartments.com would be another
Apartments.com.
big one
Yeah.
there. So that's the big player in the multifamily space. Homes.com is growing in the residential space, and then LoopNet is the place, of course, to advertise for commercial. So yeah, CoStar's definitely got a big umbrella there. And then, of course, CoStar, when people are referring to the product itself, are referring to the data product, which is kind of the core of things, or at least
Yeah.
the origins of the company, right? So collecting data that may not be easily attainable, or that's not widely known, or that's not out there, and
Yeah.
then from there that's basically delivered to clients on a subscription basis, and that's the CoStar product, right? So I
Hmm.
think it is a big umbrella. You got lands.com, you're right, but all kind of related to each other, online marketplaces
Yeah.
and data essentially. But
How about,
homes.com, I could talk
yeah,
about
would love it. Yeah.
residential trends if you'd
Let's touch
like.
on, yeah, would love that. I mean, because again, it's so broad, it affects everybody. It affects all of these products all of commercial real estate, right? It's going to start with the homes. So yeah, tell us what you're seeing.
Yeah, so I mean the data we're seeing in homes.com right now is interesting, especially for the Sun Belt. The Sun Belt was the big growing portion of the United States between 2020 and 2022, right? I mean these were the markets that had the big run up in terms of price appreciation, in terms of transaction activity. San Antonio was absolutely one of them. Phoenix, Las Vegas, Austin, the rest of the Texas cities, Dallas, Fort Worth, Houston, and then Nashville, of course. So these are, I don't want to name every single Sun Belt market, but everybody saw a lot of price appreciation and growth. What we've seen over the past couple of years, however, is those same markets that were doing so well, maybe we've seen a bit weaker situation for home prices over the past year. San Antonio has been one of the more resilient markets. We have seen less of a dip in terms of home, home price appreciation in terms of pricing,
Hmm.
but at the same time, it's been something of a flat market, right? And in terms of what we're seeing in prices over year, over the past 3 years, really. I mean, we've kind of been stuck at about an average of just over 300,000 for a house here. 310,000 maybe is the average we've had really since 2023, I'd say. So, I mean, it's been kind of in many ways treading water, but a lot of markets have seen more serious declines in home prices. Of course, Austin, but also some other Sunbelt markets have seen a bit of a notable decrease in terms of home prices. I think our Texas peers, Dallas, Fort Worth, and Houston, have also seen something similar. So San Antonio is notable in that, like, it's been treading water a little bit better than many markets over
Hmm.
the past few years. Like I said, we tend not to be the fastest growing market, but we tend to be a pretty fast growing market that doesn't rise all the time with the highest highs, but does not fall with the lowest
Yeah.
lows. Absolutely not. So that's a good niche to have, and that's San Antonio's niche, not just in commercial real estate, but I think residential right now.
Yeah. We have kind of that moniker of slow and steady, I think, for San Antonio, but which is good. It's been good.
Almost, I would say almost like fast and steady. Like
Okay.
it's
Yeah.
like it's we tend to we
That's
grow
true.
above average here.
Right.
We're pretty fast in terms of population growth, in terms of
Yeah.
pricing good. We're just not the fastest. I wouldn't say fastest and steady. Definitely like above average and steady, if that's it. It's less catchy though,
Yeah.
because we're obviously compared typically to our peers, and Austin's the most natural peer to compare to, but Dallas, Fort Worth, and Houston, and so sometimes when they rise with the highest highs, we look pretty slow by comparison, but
Hmm.
we're always growing above average. So fast and steady, I feel like, is what we need to popularize in
I
our
like it. Yeah. Fast and
circles.
steady. Before
Anyway.
we go, I know you do a lot of, public speaking for different events. I've seen you at many of them. Are you available to do that for others? Could they reach out to you for something like that? Or have something upcoming that you can invite people to or let people know about?
Absolutely. Well, I'll be in Nevada actually doing a presentation on the Las Vegas market coming
Wow.
up.
Okay.
That'll be next month for their apartment association. But for San Antonio, we don't have a public event scheduled right now. We try to do about one a quarter or so, a state of the market event. But
Hmm.
we also do presentations for clients and smaller presentations sometimes as well for
Right.
other groups. But yeah, people can absolutely reach out if they'd like to know more, or just maybe, yeah, try to make something work out on the schedule. We can probably make something work out. We here at CoStar Market Analytics love to give a good presentation. So it's
Yeah.
not just me, but all my peers across the country.
Yeah. And you
Yeah,
guys do a
so
great
people
job
can
of
absolutely reach out.
whenever you're at those events sharing about the market like you're doing with us today. It's always it's a great pleasure and it's always learning something. So thank you for that.
Thanks
Um,
for having me on.
Yeah, you bet. Thanks for being with us, sharing your perspective. And again, to anyone listening, I'll put your email or something in the description so they could reach out with any questions. Would that be all right?
Sounds good.
Good. Yeah, thanks for joining us here on Resolute Reveal. Hopefully, we can have you back maybe at the end of the year or something and kind of recap what's going on, what happened in 2026. It's again great to have a conversation with you, especially coming from an expert like yourself, always following your articles and, they're always super helpful. So thank you so much for that.
Thank you.
Great.
And yeah, we can at the end of 2026 see how wrong I was. We'll benchmark what I forecasted and what actually happened.
Great. Okay. Well,
Anyway.
Danny, thank you so much. It was a real pleasure and we'll see you soon.